money, where they have a disposable income to spend on other things. And I really think this gives us a very good idea as to what's happening with disposable income of people that are employed and people on pensions. And we know that those are not increasing quicker than the inflation rate. We suspect that is the case with pensions. We'll know next quarter. But this, we know with salaries, they are not getting above inflation increases out.
Mike, we'll leave it there, but thanks very much for your insight. That's Mike Schussler, Chief Economist at economists.co.za, talking about disposable salaries in South Africa not keeping up with inflation. Thanks, Mike. Let's get into our results service now. Altech, first of all. Altech has had a torrid time in recent years because of the poor performance of its operations outside South Africa's borders. It turned in an operating loss of more than 1.2 billion rand for the full year. That's on the back of a 1.6 billion rand loss from discontinued operations, which included its troubled businesses in East Africa. Samantha Loring sat down with the company's CEO, Craig Venter, to reflect on what mistakes were made. Here's that conversation.
Yeah, I think one of the key things that's important is that due to this experience, I don't think it would be wise for us to be totally disinterested in Africa going forward, and that's not the case. We actually feel there are areas that are very good to be involved in. I think one must remember that in this particular investment, which we made in 2008, we actually had profits in the first year of 30 million. We had profits in the second year of 100 million, and then obviously things went south from there. So I think that all in all, Africa does have opportunities. I think what's important and the lessons to be learnt are, obviously management is absolutely critical in the local environment, and whether that's expat management or local management. At the same time, the strict controls and policies that need to be put in place have to be there, especially when you're trying to manage a business from South Africa and it's quite far away within the African continent. I think that obviously you need to take into account capital intensive nature of certain businesses in terms of capital that's required, forex translations, which are very important because you've got the rand and you've got all the African currencies and you've got translation between those currencies. So a number of good lessons have been learnt from the exposure. But again, for the first 2 years, I was being complimented on making a good investment in East Africa because it was making profits. But then, you now criticize that it's made big losses. But the losses have been from impairments and us actually getting to loss-making investment.
And of course, Liquid Telecoms, who bought your East African assets, you now have an 8.6% minority stake in them.
Yes.
So does this represent your African exposure right now? And what are your plans with it? Because you of course call it a strategic minority stake.
Yes. What comforts me is that we still have exposure to the African continent, as you correctly say, through our shareholding in Liquid. I think Liquid has been involved in Africa for many, many years. They've had consistent growth now for 6 years in a row. They are the largest infrastructure player in Africa in terms of having fiber in the ground. Combined with our East African assets that we sold to them in exchange for shares, 8.6% of Liquid, it's a very powerful force on the African continent. So I think what's positive is that Liquid has a very profitable business for the last 5-6 years. It's shown good growth in this last year. So we've really transformed a loss-making entity or investment. We've exchanged that for an investment in a very profitable business that is situated throughout Africa. So I feel it's been a good deal, and I feel that we still have exposure to a profitable entity within Africa.
Do you plan to grow your foreign exposure beyond 13% where it sits right now, if you look at the makeup of local versus foreign revenue?
Yes, I think it's important. I think if you look at some of our businesses like Netstar Autopage, they're very much localized businesses, and we have good market shares in those localized businesses. We've been quite successful locally. So in order for Altech to get the growth that we require and the shareholders require going forward, one would think that we do have to grow outside of the borders of South. So, if you look at Altech's overall foreign earnings component, as you say, 13%, I would like to see that more at about 25%. So we are working towards that.
Is it going to be Africa, or is it going to be outside of the African continent?
It would be both. It would be probably more outside of Africa. We've already got our liquid investment, as we've just spoken about. So I think that you will find us expand globally. But again, we're in a phase right now that we've just got through a situation where we've taken some significant losses on sale and impairments in terms of the East African investment. I'd like the dust to settle a bit, if you will, and then I'd like to start looking at our acquisitive growth pattern going forward, and it would probably be both Africa and outside of Africa.
I mean, just looking at the share price today, it's trading below 37 Rand. 2 years ago, it was 57 Rand. The shares lost 35% of its value in the past 2 years. Evidence. How long do shareholders need to be patient for?
I think that we are well on the road to recovery. I think there have been no surprises in today's results. This was known by the market. It's been built into the share price already. It's been there for a while. We provided a trading statement already over a month ago. So people and investors need to understand that we've had a very bad, unfortunate set of results from East Africa. Management did say they would fix it. We've done that. We've kept our promises. Those two loss-making entities are gone, finished, gone. And our order book is exceptionally good right now, as I said earlier in the interview. So I would imagine that we are on a very good, solid road for the future without having 204 million rands worth of operating losses that are going to affect us going forward that we had this past set.
And you've talked revenue from around 10 billion Rand to 20 billion Rand in the next 3 to 5 years. So if you look at that kind of 5-year medium-term growth target, what is going to be of the business right now and of the moving parts you have, where do you see the most significant growth coming through?
I think if one looks at our portfolio of businesses, we've got superb businesses in the form of Autopage, Netstar, UEC with the set-top boxes, and 10 billion rands worth of revenue that is there. I still stand by the fact that our revenue will increase substantially over the next 3 to 5 years. Whether it will be double, I mean, obviously I would hope. If it's slightly less than double, that's still a great performance. So all I'm trying to indicate is that I do believe the top line is going to grow quite significantly going forward. I think that the growth mainly will come from what we've done in this of results. You can see our structure for Altech is telecoms, multimedia, IT, and then we've created a business development growth office, which is 4 growth threads that we've identified as Altech management and the board that are going to drive the revenue growth going forward 3 to 5 years. So they fit within that 4th leg of Altech structure, the business development growth engine or growth office. Those 4 growth areas are telematics, so very much aligned to Netstar's business. The second one is payment platforms and payment mechanisms, where we've got some very good opportunities in that area. The third one is converged solutions, but in a big scale. And quite frankly, the Huawei partnership, the Chinese partnership, spans all of their products right the way across the board. So there are a lot of growth possibilities, and PRASA, first contract that we tendered with the Chinese, and we won that tender. So I see good growth coming from those areas, and that should help us in our top line growth going forward.
That was Craig Fenter, the CEO of Altech, commenting on the full year results which were released late yesterday. More results after the break. We'll be speaking to the CEO of Clicks, and that's David Neal. So please stay with Power Lunch.
Power Lunch, brought to you by Altech. Leading technologies, touching lives.
Ideally located in the center of historic Cape Town, the tall Cape Town is home to a blend of sophistication